So our next speaker is Blagovest Belev. For those of you who are not from Bulgaria, Blagovest, that's his first name. It means good news. So I hope he has some good news for us, because we heard a lot of naysaying this morning, earlier. He's going to speak about everybody's favorite topic, how to make money from cryptocurrencies, how to invest in this space, how to do portfolio management. So he's getting a mic change, and he'll be with us on stage shortly. Oh, and I should also mention he's another serial entrepreneur. He's a co-founder at Tavex Golden Exchange. He's also a founding member of the Bulgarian Bitcoin Association, so he's been in this game for quite a long time, for a number of years. Please, a round of applause for Blagovest.
Thank you very much. I hope I'm going to bring some good news. Today, the market's going up, so that's, if you haven't seen that. Thank you very much for inviting me here. I'm very glad to be here. Thanks to Ilian for organizing this great event. I'll try to be as concise as possible. Obviously, we don't have a lot of time. And I would like to talk about investing in cryptocurrency, crypto assets in general. And put a perspective that is a little bit different than most people that I've heard so far today. First, I wanted to define the blockchain. And from my perspective, if you just use blockchain, this is another form of a database. And the exciting things happen when you include proof-of-work algorithm, public key cryptography, and a native token in a permissionless system, and then you have decentralization. And decentralization is very important to achieve censorship resistance, and for not much else. Things that need censorship resistance tend to be very important for society, very fundamental, and also they tend to be monopolized by some entity that does not allow competitors in the field. And if you think about what is the first thing that comes to mind when you're thinking about fundamental important thing which is monopolized, and that is money. And it seems like when it comes to investing, if you're betting on crypto assets that may become general purpose money, that has the highest upside potential. Because at some point, whatever we use for general purpose money will be in the market cap range of tens of trillions of dollars. Right now, the world M1 money supply is about $20 trillion. So we could expect similar size for whatever is used for money. And why money? I have something very brief that you've probably seen, but it's good to remind often. This is the US money supply. You see an exponential rise since the last crisis in 2008. So that's not sustainable. This is the interest rates set by the Federal Reserve. We're living in all-time low interest rates, which are completely distorting the economy. And how they're distorting the economy, we see the government debt, and not only government debt, but this is just a chart of government debt going, it more than doubles for the last 10 years. Which is obviously, again, unsustainable. As a result of that, the purchasing power of the currency, the US dollar, the world reserve currency, is going down. And it's gone down about 60%, more than 60% in the last 35 years, and more than 96% since the Federal Reserve started operating in 1913. And Bitcoin, as the beginning of this whole blockchain revolution, was meant to replace or to try to replace money the way we know it now. Back in the last bubble that happened in 2013, the picture was very rosy. It seemed like there is very little potential problems for Bitcoin. It was still fast, cheap, secure, and reliable. People knew they could build a lot of things on top of Bitcoin. They could use it for smart contracts and for exchanging any type of assets, not just money. Vitalik Buterin was talking about building Ethereum on top of Bitcoin. There were just a couple of roadblocks that were obvious at the time. One was privacy, because we obviously need privacy, at least the option to have private transactions in the money that we use. And the second was scaling, which it didn't seem very problematic at the time, because even Satoshi Nakamoto, the creator of Bitcoin, was talking about big data centers for miners, and they will try to accommodate as many transactions in the block that is possible. And everybody thought that, hey, when we fill the blocks, we'll just increase the block size until we figure out a more sustainable solution of how to accommodate billions of users. And what happened a few years later, another problem came up, which wasn't obvious before, and it's not a technical problem, it's more like a social problem, where Bitcoin became too big to change, too big to influence, and as a result, we had a huge fight between the community in which direction it should take, and how to proceed with the evolution of the project. And as a result, there is a lot of projects that came out, not just money-related projects. There's a lot of utility tokens, a lot of security tokens, a lot of other applications of the blockchain technology, but also a lot of projects that could have been built on top of Bitcoin are now being built on their own chains because they cannot innovate on the main chain of blockchain because it's just too big and the community is too big. And obviously this is something very normal for disruptive technology. We see that in history a lot. When we have something that is so fundamentally changing the society, we have all type of bubbles and expansion of thousands of companies trying to do something out there. We've seen that with the internet in the 90s. We've seen that before with the railroad industry, with the airline industry, with the car producers. There's a ton of examples in history we are living in this expansion period right now. And as I just mentioned, we have a lot of, in these hundreds of projects that we have now, we have a lot of utility tokens. Security tokens are starting to come up as a hot thing, especially in 2018. It seems like a lot of shares and the stock market could be tokenized faster than we actually thought. But from an investment perspective, at least to me, it seems that whatever plays the general purpose money game, which could be a cryptocurrency or it could be a smart contract platform, has the biggest upside potential for profit. What are the trade-offs that those systems have? There's this famous trilemma that they say a cryptocurrency cannot be at the same time secure, decentralized, and scalable. So they need to compromise something. And when you analyze a cryptocurrency, you don't want a compromise with security. If you use something for money, it must be very secure. You want it to be scalable so that millions of people can use it, billions of people should use it. And the only thing that we don't know is decentralization. We don't know how much of that we need. We need just enough to achieve censorship resistant, but going too much can cost us some of the scalability or the security. So decentralization is the thing that most currencies are playing with right now and trying to experiment different visions of how to implement that. And it seems like, at least to me, it seems that centralization in mining, in nodes, in businesses is not a problem. It's a natural tendency. But it's not a problem as long as you have permissionless entry of new competitors. So it is very normal for mining to centralize because companies get more and more efficient, they drive out competition, and there will be fewer and fewer miners. That's just the normal evolution. But if they become malicious actors, they could be easily replaced by better but smaller participants in the market. Or if they're censored by the government, other people could also take the vacuum and play that role as miners. So decentralization is a moving variable. It's not fixed. And that's the good thing about it. So how to position your portfolio if you're investing? It's not as easy as it used to be. 5 years ago, it seemed like Bitcoin is a sure bet. And you should, if you put all your baskets in, all your eggs in Bitcoin, it makes sense. Now the picture is a bit different. So if you need to invest in different cryptocurrencies, you should choose different projects that somehow complement each other. And I'll give you an example. For example, if you have Bitcoin, the legacy network, and you also own Litecoin, there isn't much diversification. The direction of the project are pretty much the same. Litecoin is a clone of Bitcoin. There are just minor differences, technical, which are not, their path to scalability is the same, their privacy level is the same. So you're not getting much diversification in your portfolio with Litecoin. But if you have a smart contract platform that is being used, it makes more sense. Because at the end of the day, we don't know what will turn out to be the general purpose money that we use. Maybe it's going to be something that is very useful, and it's created for something else, and it becomes very useful there, and then it becomes money. It doesn't need to be created as a currency in the first place. And it seems that there's a lot of enthusiasm and energy going around smart contracts, so it makes sense because they also deliver some value that just a currency doesn't have. Also, if you... privacy is very important, obviously, for the crowd here, especially in this conference, but in general, people would want to be private at some point. So privacy-centric cryptocurrencies or projects in general are a good diversification in your portfolio. And also, there is a whole bunch of different directions taken in the scalability problem. A lot of the new coins that are being built are using proof of stake. And to me, it seems smart to have both proof of stake and proof of work coins in your portfolio because there is a lot of fundamental difference in them. And we still don't know which approach will be better and which will last the test of time. I have a preference over proof of work, but this is, I may be wrong. So I'm hedging my opinion with some proof of stake coins. Also, there is on-chain versus off-chain scalability. This is very well shown in the Bitcoin versus Bitcoin Cash debate, where one is trying to scale off-chain with second-layer solutions, and another is trying to accommodate as many transactions as possible on the chain. And we don't know which one of those will work eventually the best. So it's very wise to bet on both, because each of them is very complicated, and it's very, very difficult to tell what will happen in a few years. So in terms of diversification, this is good, to keep both of them. And the last thing I wanted to mention is governance. It seems like the latest hot topic in new crypto platforms, to have some built-in governance inside. And it kind of makes sense, because all those technologies are an evolutionary process, and once they get very big like Bitcoin is today, it's very hard to change them. And if you have some kind of a consensus system built in before, you may be able to change them later for the sake of the growth and the general agreement of the community. So, short-term outlook, we are a bit bearish. We are telling that to the customers of our funds. We are bearish for the short term. Why is that? This is a very good chart. If you type NVT ratio in Google, it's a great indicator, in my opinion. The first person who came out with that is Willy Woo, a very smart guy. And it shows the fundamental value of the blockchain, of the Bitcoin network, is what is the volume transacted every day, the volume measured in US dollars. For example, in the recent days, we have about $1 billion worth of Bitcoins transferred per day. And if you divide the total market cap of Bitcoin by the daily transaction volume, you get this ratio, which is called NVT ratio. And right now, as you can see, it's almost as overvalued as it was in late 2013 and 2014, which shows that we are ready for a slowdown. It means that the price is too high and the transactions per day are not catching up with the price, which means that people are overly optimistic for the future, and there may be a correction. A slight change of this ratio shows the signal when it's good to buy and sell, which is remarkably accurate, actually. You could see those spikes over here are every time there is a spike above 150, there is a drop down in the price. This is the December high that we got, and now we are turning very high again, and it seems like in the next 10 to 20 days, if the price comes up, we may have another sell signal. But this is just for the short term. Also, another bearish indicator, at least to me, seems that the ICO optimism hasn't come down, and that shows a bit of an exaggerated hype around the market, which is typical for the late cycle of a bull market. So it just makes sense for the short term the market to be down, maybe until the rest of the year, maybe a bit more, and then a longer term there will be another bubble or another wave of interest like we saw in 2017. And this is the long-term view. I'm super bullish on the whole industry long-term, and by long-term I mean 1+ years from now. There are just a couple of events. Every new wave of interest or cryptocurrency bubble before came after the Bitcoin reward halving, which happened in 2012 and in 2016. And every time after that, we start a new wave of enormous interest in the whole sphere. The next one is happening in 2020, exactly 2 years from now. We could expect that this time investors will act a little bit earlier. So I'm not going to be surprised if the next bubble or the next wave of interest comes in 2020. Also, we are a huge catalyst for cryptocurrency prices could be a next financial crisis. We've been living in the second longest economic expansion period in the US for at least, which is 107 months so far. The longest period was 120 months. So after 1 year, we're going to reach the longest economic expansion period. So it's getting highly likely that we're going to have a recession soon. And also another interesting marker is that every time the new highest building on Earth was built, there's another financial crisis. Last one was built in 2009 in Dubai, the Burj Khalifa, when Dubai almost went bankrupt and they had to be bailed out by Abu Dhabi. And now we have the Jeddah Tower, which is about 1,000 meters, and it's supposed to be ready in 2020 in Saudi Arabia. You could read about this skyscraper index. There is just a lot of examples in history, including the Empire State Building during the Great Depression and a lot of others. And finally, when this next financial crisis comes, this will be, at least in my opinion, the tipping point for people to use cryptocurrency as money because they will need it. Because of the high levels of government debt all over the world, central banks cannot raise interest rates anymore, or at least they do not have that many bullets as they had before. So they will face the trade-off of either having high inflation because of the money they printed recently, or raise interest rates and have the economy slow down dramatically and have a lot of governments going bankrupt and companies too. So just as an example, if the Fed raises interest rates by 3% now, the US government will have to pay in interest payments annually as much as their military budget is right now, which is about $600 billion. So it's going to be very hard for them to increase interest rates to levels where they could stop inflation. So I believe this will be the tipping point for using cryptocurrency. And unfortunately, or fortunately, depending on how you position yourself, that's not going to be too long from now. Thank you very much. I don't know how much time we have for questions.
We have about 3 minutes, and I already see a hand raised over there.
Hello. Great.
It's on, just start speaking.
Great speech, thank you. I want to hear your opinion. Is it possible cryptocurrency to replace fiat currency or become fiat currency? I mean, controlled by institutional governments.
Yeah, absolutely. I think we're headed down the road to achieve that. Maybe not within the next 2-3 years, but within the next 2 decades. I think this is very realistic. Yeah, it just makes sense. It is more important. It's one of the most fundamental things for our society, and it cannot be monopolized or controlled by a single entity, because this entity becomes too powerful, and we all know that whoever is too powerful, they tend to abuse their power. And if we already have the technology to distribute this power, then I don't think that anything can stop that development in the world.
We have one more question there. Yeah, go ahead.
Great presentation. I have a question. If we have a portfolio and we already invested in stocks and bonds or ETF, can we use cryptocurrencies as diversification? And what is your suggestion of optimal way to the cryptocurrencies in our portfolio?
That's a very good question. Of course you can, and not only you can, but you probably should, because cryptocurrency is not correlated with the other asset classes, which gives a great diversification in your portfolio, minimizing volatility, I guess. What percentage is very, very individual, depending on how much you understand and you believe in the technology, what your general income is, what is the general amount of money being invested. I advise anywhere between 5 and 20% makes sense. But also it depends on also what else do you have in the basket. Because if you have a lot of shares, like stock market shares, in a time of a potential financial crisis, that's not good. So we need something to diversify and hedge against the potential crisis, which could be gold also. Gold is a great hedge against the potential crisis, and it's way more stable than cryptocurrency. But also the upside potential is way lower too. Anybody
Great,
else?
thank you very much. We're out of time, unfortunately. Thank you.
Thank you.
Thank you.